Now, the issue with Tether, according to the CFTC, the Commodity Futures Trading Commission, and other sources, is that Tether has misrepresented the U.S. dollar reserves to back every USDT in circulation. So, simply put, Tether reserves are or were not fully backed by the majority of the time uh, with U.S. dollars reserves. So, the time frame that the CFTC found that they don't think that it was maintained or reserved properly is from June 1st, 2016 to February 25th, 2019. And that's a time frame that's in question at the very least. So it could have been longer. And for anybody that doesn't know, they have an active case against Tether. They have charges that they're trying to file against them. So in closing, I'd like to say that Tether is a systemic risk to the cryptocurrency ecosystem. Now, why is that? Because a currency that is not fully backed could cause severe liquidity shock across multiple cryptocurrency markets. Think of it as a bank run. When many depositors go to withdraw their money and there's none to withdraw. So, with that being said, I'd like to yield to Rich.
Thanks, bro. Yeah, just to kind of back a little bit that he was saying, or just to add a little bit more to it. Yeah, it was supposed to be 1-to-1 to the dollar, but that's where like the discrepancy came in because they couldn't factually show that they had that money to back it. So initially, I believe for every $100 USDT, it was only really $2 and some change, and the rest was just papers or just random things to kind of back it. Um, when it comes to Tether, like Dave was saying, it is a huge risk to the entire cryptocurrency ecosystem because everything follows behind Bitcoin. So if Bitcoin falls, all the other coins they fall drastically. From a 2% or 3% drop from Bitcoin. So where the whole thing kind of came in about Tether was the fact that it's speculation. This is just kind of hearsay right now. But what I'm saying is that it boosted that last bull run in 2017. I think there was about $800 million worth of Bitcoin that was bought up, which triggered the bull run. So that's when all eyes was on Tether. Like, hold up, what's going on? The New York AG, they put the lawsuit in. Tether paid out about $18 million. They paid the $18 million fine, and then they kept on going. So when we speak about a lot of these cryptocurrencies and stuff like that, a lot of people really don't care about cryptocurrency blockchain, which is fine, but it is the future as far as where we're going with the technology. But in the short term, a lot of these VCs, a lot of Wall Street guys, they all jump in because they're trying to make money. So if you can easily just kind of pop up and be like, oh, 18 million, bet we got that. I'm gonna just eat that fee and then keep it pushing. Nobody's gonna complain because their pockets are getting full. But then they go back and then they manipulate the market because it's basically money that's not backed by anything. So where it comes to USDT, and again, you you all know how I feel about Ethereum. It always boils back down to Ethereum when they got that free pass. So without going too deep in it, it is or supposedly a 1-to-1 to the dollar, and there's many other USD backed quote unquote stable coins. There are more ones that I would trust than any other. I do not like Tether at all. I have used it one time to liquidate some assets, but I don't trust it at all. And there are other alternatives, but in the grand scheme of things, yeah, it is a huge risk to the cryptocurrency market. In fact, that if it does fail or if they do stop printing, it could cause a possible collapse or a deterioration of Bitcoin's price, which will drop the price. And then we don't know what would happen after that, but it would essentially affect the whole crypto market.
I have a question. So it cannot be paired with USDC or other stable coins?
So USDC is another Ethereum token too. They're backed by big money. They're backed by Goldman Sachs, Visa, I believe Mastercard. Um, was it Visa? Visa. There's a actually Shavar might like to hear this. There's a SPAC called AUR that it tapped in with them. But going back to your question, Mac, not AUR, CND. I'm sorry, Concord Acquisition. CND is the ticker. But yeah, like you're saying, Max, it's not USDC, so it's its own entity. It'll be you got Tether, you got DAI, you got Trust USD, you got USDC, you got the GUSD, Gemini US dollar. There's a whole bunch, but they're supposed to be initially just 1-to-1 with the dollar, so they should have a cash reserve or liquid cash reserves that are supposed to represent that cryptocurrency. So you're gonna see a lot of cryptos. There are some. There's one called Cello Gold. There's one called Elron, if I'm not mistaken, Dave. They're supposed to be pegged with gold, physical gold. So you can kind of do that to prop your crypto up, but you have to show that that is what the crypto is tied to. So if you just say, oh yeah, we're 1-to-1 to the dollar, and we got about $1 billion in cash flow that is connected to this coin, but you can't show that that money's there, then there's some other skeevy stuff going on. So a lot of people, and this is like anybody who's like OG to the cryptocurrency market, we all feel it. We all have like a strong distaste for Tether, because again, everybody's cool when they're making money, but when it's manipulated, it kind of sours like the long-term outlook of it, because if it starts to crumble down, then that's it. You know what I mean? A lot of people lose a lot of money, whereas anybody who, quote unquote, were inside and they knew the information prior, they were able to get out before the house burned down, so to speak.
I have a question, and to clear up because I don't understand. So you're basically saying USDT cannot prove that they have money in the reserves to match the dollar 1-to-1.
Yeah, that is correct. And if I may add to what Richard just saying, they don't have. It's not backed 1-to-1. The USDT is not backed 1-to-1 with. So basically, it's not $1 for every USDT on the books. They have it. They have it's backed a little bit to the US dollar, a little bit to the euro dollar, and I believe I couldn't verify this, but I believe that some of it may actually be backed by debt in China. So it's the worst stable coin to be in. Me personally, I would choose USDC. You could even choose BUSD, which is regulated in the state of New York. Um, you could use PAXG, which
Well, New
is
York is full of shit because the person who doesn't want it here, first of all, they need to fix the parking tickets and the whole assessment fee that I have to keep paying on my driver's license before they call anything else a scam. New York is a scam, and I'm getting out of the state. You can't even trade crypto. Half the cryptos that's on the Coinbase, you can't even get access. Only people outside of New York could, I think, purchase Shiba because people here in New York can't even see it. So I don't care what a New York accepts because they want money, and I think that was their issue with Tether. You ain't protecting the people. That so anyway, my bad. Dave's not here.
yeah. But my only
I
point
love
in
New
bringing
York,
up
but they
my,
be raping us.
yeah, my only point in bringing up BUSD being regulated by New York, it kind of gives you some clarity as far as knowing that BUSD has a good ratio of BUSD being backed with the US dollar and whatever reserves they have. You know what I'm saying? That was the only point in why I brought that up. Because with Tether, you don't know what you're getting with that. And Rich, I don't know if you have any.
Who holds Tether? I wait before you speak, Rich. When I get any crypto, it's just because it's paired with Tether. I'm not actually holding and investing in Tether. So, Rich, maybe you can explain why. How
Oh,
is
hold
that
on,
an
Rich.
effect?
Before you answer that, okay, Max. Okay, so you're getting something that's paired to Tether, but you still have the risk associated with Tether by getting something that's paired to it, and that's another issue that we're trying to drive here. You're better off, you know, choosing another parent unless you want to, take on that risk that comes with that.
Yeah, what he's saying is basically if you get anything that's paired to Tether, and let's just say, you know, another lawsuit goes through, or they lose or something like that, or it's found proven that they're doing some real skeevy stuff, you're kind of stuck. So like usually what I used to do, or actually I won't even say used to do, I've done it only one time, which is the crypto market started crashing, and I did, this is the only time I ever panic sold. And I wanted to convert one of my cryptos into a stable coin so that it wouldn't drop. I can hold the value at the top where I was at, and then maybe try to buy in at the bottom. And I cashed out, and I was holding it as tether. Now you run the risk because you're holding something that it's shaky. You get what I'm saying? You don't. It doesn't have good clarity, and it doesn't have a good track record.
Richie,
So
the
yeah,
question, because Bitcoin is paired with many coins. So say they come out and USDT doesn't exist anymore. They have a pair with ETH and other stable coins. So as long as you have that pair, you should be okay. Why would Bitcoin crash because USDT is crashing? That's my
Because Tether is one of the top um, stable coins as far as use. It's up there in volume, if I'm not mistaken. So it has ramifications regardless to if you're in another parent or not, because of how.
yeah, it's almost pretty much like too big to fail. To like they're actually saying that Tether is propping Bitcoin up, and you can actually see that when the volume of Tether starts dropping, or they're not printing, or you don't see the numbers kind of going up in Tether, you see Bitcoin start to dip. So remember, I was telling you before, the joke was once Tether start going, then Bitcoin starts going up, which you can actually see on the charts. So it's really too big. But like, yeah, there are other coins that are attached to it, but it's like the top dog. Like if you look at the coin market cap, you can see where it's at versus any other stable coin. Now, other stable coins, they want to make them more decentralized, which would be like DAI and all of that. And they really don't want that. You know what I mean? As far as like, whoever you want to call it, 1%, people at the top, whatever. So they want to get into all of this, the more centralization. But when it comes to Tether, again, if it's infringing on anybody else making money or something like that, that's when they'll step in. And again, like the AG, they came up, they were like, "Yo, y'all are playing games. Like we need some bread," and they had to cough up $18 million, which they did easily. That's the scary part. And it's only in the Tether um workplace. There's only 11 members in their workplace. So if they can easily hand over $18 million, it's scary because it's almost like, again, they're just
I
printing the
see
money.
85 million. I'm reading it now. They gave 85 million in seeds trading operations with New York.
Yeah, see, so I was
So
way off. So that's scary. If you got that type of money to be paying something off, and then it's just almost like you're just pushing the button, printing, printing, printing. Now, when it goes into Bitcoin, it just gives it a not a bad name, but it just shows that it's propped up. It's being held up.